Ernie, please take over.
Thanks, Darwin. So I want to thank you all for coming out today. I'm actually shocked every time people come to hear tax presentations because it's not something you normally would want to go to, but something I know you have to go to, so I'll make it as painless as possible. I'm going to keep the presentation to about, I'd say about 25 minutes, because then you're going to all drift to sleep if I go longer. And then I'm going to open it up to questions as a group, and then you can come up at the end if you want to talk privately. And I know everyone always starts the question off with, my brother-in-law said this, or there was a guy in a bar that told me that, and it's usually not true, but I'll clear up those questions and see if any of them were true. Now, before I talk about long-term moves to Hong Kong and the tax issues from a Canadian perspective, is anyone here on a short-term assignment, like say less than 2 years? If you ever fall into a situation like that, then you're likely to continue to be seen as a tax resident of Canada, and I'm going to cover a lot of the residency concept today. Most of you are probably in a permanent move situation, and that's where either your employer or you on your own decided to come to Hong Kong and live here on a permanent basis. And when we look at residency, the concept we look at is whether you intend to be seen as a non-resident of Canada for tax purposes, and your intention is supported by your residential ties. So if you say that my intention is to live and work abroad here in Hong Kong forever, you could say I'm going to be gone for 3 months or 30 years. It's really based on the residential ties that you have back in Canada. Before I talk about residential ties, I want to clarify one concept that a lot of people get confused about, and it's where Canada has a tax treaty with another country. So I'm going to use a comparison between Canada and China and Canada and Hong Kong. So Canada does not have a treaty with Hong Kong. Hong Kong only has a treaty with China, and China has a treaty with Hong Kong. But China does have a treaty with Canada. So what that means is when we look at residency, we first look at domestic tax legislation. And in Canada, we look at whether you're a resident based on your residential ties. So let's say, for example, you maintain significant enough ties in Canada to be seen as a tax resident for domestic purposes, and then you went to China, so you start working in Beijing, and Beijing or in China sees you as a tax resident as well. So what happens? Well, you're seen as a tax resident of both countries, but then the treaty comes in and it overrides the domestic tax law of both countries, and it says you'll be a resident of the country where you have the majority of your ties. So you can't be seen as a resident of more than one country at the same time if there's a tax treaty. So that's the case of Canada and China, where if you did maintain some ties with Canada, you shouldn't be as worried because China's probably going to see you as a tax resident and a deemed non-resident of Canada. But with Hong Kong, there is no tax treaty. So for all of you, you've got to put yourself more into the perspective where you're going to want to minimize your ties as much as possible, more so than if you went to a tax treaty country. Okay, and I'm going to talk about those ties and how you would be seen as a non-resident of Canada. Now, there are two broad categories of ties. There's primary ties and there's secondary ties. No one secondary tie can cause you to be seen as a tax resident, but one primary tie can. Now, within the primary ties, there's three other categories, broad categories. One are social ties, property ties, and economic ties. Now, this goes back to the concept of residency in terms of intention, because your goal is to sever as much of these core ties as possible, and there's others that aren't listed. There's probably a whole barrage of ties that you could think of, but these are the more common ones. And what you really want to do is support your claim as a non-resident by severing as many of these as possible, and I'm going to talk about them. Now, the most common one is leaving a vacant home in Canada. We don't recommend that you leave a vacant home in Canada. You're always going to want to do your best to either rent the property to someone not related to you at fair market value, or sell the property. A lot of people think that they can't rent the property and be seen as a non-resident. That's not true. So I hear that all the time, and that's definitely not the case. So even if you've never been a resident of Canada, if you purchase that property and you rent it out, what's going to happen is you're going to be subject to tax on the property itself, but not on your foreign income. Okay, so your rental income will still be taxable, but none of your foreign income will, and it's a great way of severing your residential tie. with Canada if you own a property in Canada. Leaving a dependent spouse back in Canada, everyone always says, can I get divorced? And yes, you can get divorced. But if you get divorced, you can't by accident meet at the MTR station and get back together with your spouse. So if you want to sever residency, it's probably not a good method of doing it by leaving one spouse behind and trying to become a non-resident. Usually two spouses will be seen as residents together, so you're looked at as one family unit. Now in terms of secondary ties, this is just an example of some of them, but basically what happens is if you've got, say, a bank account and a credit card in Canada, you're probably not going to continue to be seen as a tax resident. It's just not significant enough. But if you've got a whole basket of these secondary ties, then it can cause a problem. So I recommend that when you're looking to sever your ties, you're doing your best to try to sever them as soon as possible. There's no set duration of time, but whatever is reasonable given the circumstances. The Canada Revenue Agency is just looking that you are making your best efforts in terms of trying to sever these ties. Now, an important one that I always bring up is Provincial Medicare, and there was a writer for the Financial Post back in May, and I hope she's not in this room because I forgot her name, but she has been a big proponent of encouraging the government to crack down on non-residents that have provincial Medicare. And basically her argument is that some of them are utilizing health care, and even the ones that aren't are keeping it as a safety net in case they were to get ill and they want to come back to Canada to be treated. I don't recommend that anyone keep provincial Medicare, even if you don't use it, because you're not paying into the Canadian tax system as a non-resident, so it's definitely something you're going to want to sever. Now, if you were to contact the provincial ministries, so if you go to the Ontario Ministry of Health website or the BC Medicare website, the way they word the concept of you severing provincial Medicare is kind of confusing, because they let you do something called a deferral, or you can keep it dormant for, let's say, 2 to 5 years so that you could quickly reactivate it. I don't recommend you go that route, because you're really going to want to show your intention to sever these ties, so that's definitely one you're going to want to sever. Another problem one is driver's license, and I know we were in Macau today and we were talking about, you know, some people were saying you can swap a Canadian license. Has anyone swapped their Canadian license, their provincial license, for a Hong Kong license? So you've done the direct swap, and it was because you had the blue card? Do you know the answer?
I did mine many years ago.
Okay.
And I also, here they let me keep my, they didn't take it, they actually gave it back to me.
Okay, they just want to see it.
No, I lived in Dubai for a few months.
Right.
And I gave it to them and they kept it.
Right, it depends on the country.
Yeah.
So, you know, Germany, I know.
I wasn't going to use it anyway.
Right.
It was just, I said to the guy, well, we're driving on opposite sides of the road. Just give me a license to do that. No problem. Here.
Yeah.
No exam, no, but I don't know what it's like now. That was 18 years ago.
So if you've done the swap, or if you got your Canadian license, or are able to do that, even if you're not going to drive, so if you take the MTR and you never plan to drive, try to get the local license. And then when you cancel with Ontario, you would either cancel telling them that you swapped it, or you cancel giving them back the driver's license, okay? Now the other issue with having, I'm more concerned about the fact that the license has your address on it, and I know none of you live in Canada, so you're using your parents' address, your brother's address, your neighbor's address, so it's not good to have a Canadian address in your back pocket. Passport's okay. It is considered a minor secondary tie, but technically the Canada Revenue Agency is going to stop considering it a tie, because if you don't have a passport somewhere else, it's ridiculous, because you're not going to cut up your passport. Otherwise you're not leaving this country or entering any other country. The other thing is health card. Does anyone still have the red and white one? I do. Remember the fancy one that they want you to get rid of? So same thing, obviously you're going to want to get rid of it anyways, but it's got your address on it, and they don't allow you to have a foreign address on your provincial Medicare card. So you're going to want to